This is Greg McCloskey. I'm with FXDD, and this is a Forex commentary for FX Street to talk about the Bank of Canada interest rate decision, which is awaited here and expected to be announced at 9 a.m. What I'd like to remind everybody is that although the market is expecting that they will raise by 0.25%, we don't know really whether the market's going to go either higher or lower. What we do know, however, is that the price is going to tell us the story. The price is going to tell us which way the bias should be for the dollar versus Canada. Now, typically when a country raises their interest rate, you should see the currency strengthen. That is, the dollar Canada move lower, and that's what one would expect. It doesn't necessarily mean it is going to happen. So this is the reason why we like to look at technical levels at the market price and have the technicals tell us which way the market should go. So there are some key technicals that we could look at, in particular off the daily chart. We're going to start off with this chart, and this green line here represents the 200-day moving average. The 200-day moving average is a moving average that I feel that the market pays attention to. It is a level that you're going to see some action around. You can see here when the market initially came down off of its peak here last week. Where did it go to? It went right to the 200-day moving average. The next day we broke through, it closed above it. The next day, yesterday, we actually closed below the 200-day moving average. But because of the interest rate announcement, we are seeing some consolidation as the market tries to figure out what they're going to say, the Bank of Canada, and also the market reaction at that point. So today's going to be a key day for the dollar versus Canada. That 200-day moving average currently comes in at 104.74. So that's going to be a level that we're going to be watching on the downside. If the market is able to find support against that level after the number, we could see the market even start to rally despite the fact that they may have raised rates. If the market moves through that 104.74 level, we should see that level act as resistance for the pair, with a move perhaps down toward the 103.28, or that would be the target, the 103.28, which is a 100-day moving average on this daily chart. That would be a target level for the dollar Canada on a break of the 104.74 level, which again is our 200-day moving average. Now let's go to our hourly chart. I'm going to put in that line at 104.74 here. Now off this hourly chart, we get another clue as far as from the technicals go, and that's the ability of the market to pretty much stay below this 100-hour moving average, and that 100-hour moving average currently comes in around the 105.32 level. So that level is going to be watched on the top side. So we have support down there. We have resistance up here at the 105.32 level, so we've now straddled the current price is trading at 104.97. From a technical perspective, if the market it should break above this 100-hour moving average, we should see the market head up toward these resistance levels at 105.69 and perhaps even the 200-hour moving average. So that certainly would be a target on the top side. That 200-hour moving average, which currently comes in somewhere around the 105.90-ish type area, maybe 95. That's the green line in this chart, and that would be the target levels on the upside for the dollar versus Canada on a break to the upside. On the downside, we break that 104.74 level, and we should see further pressure in that currency pair, testing the lows for the week. Most certainly, it would be a certain target on the downside, and ultimately the target would be going back again to that daily chart, would be the 100-day moving average at 103.28. So that's the setup for the dollar versus Canada here, as we await that release at 9 a.m. Look for the comments from the Bank of Canada officials in their statement to also have an effect. So let the dust settle, but watch your technical levels because they often tell you a nice story about the direction for the currency pair. This is Greg Michalowski with a look at the Bank of Canada interest rates decision and a look at the technicals as we head into that key release.